times. We're going to kick off, but all right. Good evening, everyone. It's about 7:15 on Sunday evening. A little bit of a late start tonight. My apologies. Very much expect this to be a regular thing at 5:30 pre-open on Sunday, but just I'm sure everyone on here is familiar with when family calls, you got to jump sometimes. So that's it. Fortunately, everything seems to be okay, and we can get back to the business of the markets. I'll try and be pretty efficient. We are late. We've got a small gap up at the open. We opened up about 15.20 on the ES, it looks like, and we're fading down, still up about 4.5 points. Still looking very bullish across the board. Falling profits higher, and we'll get into some detail on that. Yep, there's the cursor and everything. Seems like we're going okay. As we've been talking the last couple of weeks, that the power of this has to be respected. We can even highlight this for the first couple of days when we finally got our consolidation. We were trying to dip down to the lower end of that range, but middle of last week, we were seeing higher lows. And then at the end of the week, we got that push higher. This is Thursday, that's Friday. Tiny reversal, but I'm not making anything of that until we can get below, certainly below Friday's low. But realistically, I'd want to see below here to get even thinking about shorting. Anyone who's trying to short something like this is fighting and pushing their own perspective on the market, and I try very hard not to do that. Look in here again, the 30-minute chart. This is what I show up to get the greater detail. You can see again, this is a few days ago, late April. Any dip is getting aggressively bought. These are just tiny spikes down and immediately take it back up. A little bit here, but you can see there's a lot of resilience, a lot of buying interest. So don't be in a rush to short. Here's what I'm looking at, the Friday low. A push up, just wasn't able to hold it. As extended this is, that's fine. That's not surprising. Let's just not get too aggressive on shorting these. NQ, same thing. These are your AI names, Mag 7 names. I'll talk about it in a minute, how they've resumed leadership. I was noting for some time that value stocks had taken over for about 6 months from kind of the early October into the Iran skirmish, whatever you want to call it. They've been leading. They're still doing well, but the NASDAQ and growth names are really ripping back and retaking that lead. Breadth, a lot of indications suggest we're really healthy, and I don't want people fighting this. That's what I want to emphasize more than anything. Again, short term, the 30 minutes, you can see the small pushes down, but here just higher low, higher low, higher low, and new highs, new highs, new highs. This is barely a consolidation. It's still just leaking higher, and let's not fight against that. Russell 2000 small caps. I'll talk about it again in a minute. Where I really, for quite some time, thought we could. Hey, David, thanks for joining. Sorry. Really thought that small cap could have the potential to lead here. I'm seeing some things that are calling that into question, and we'll get into some detail there in just a moment. All right, here's where we're going to get into some detail. Dollar index, for those who've been listening, know I've been pounding the drum on this for months now, particularly back to kind of July, August last year. I said, look, the weak dollar play is really going to be in play for a while. We saw what happened to gold and silver last fall. The trade, I don't think, is over. This is a 15-year trend line. I apologize for regular people here, but I have to make a lot of noise about this. If this breaks convincingly, particularly if we can get below that failed breakdown, I think the weak dollar players are going to come back with a vengeance, and you're going to want exposure here. Gold and silvers, precious metals, copper, a lot of things like that certainly look good. But energy for me is probably the primary beneficiary if when this breaks. It is possible that we go sideways through this. It's such a significant trend line. I view that as unlikely. It's certainly still possible we could rip higher. Besant would have you believe that there's a dollar shortage. I'm not sure I believe him. So this is one just belongs front page on everybody's screen, and people need to be paying attention to this and be able to have an idea for how you're going to play this if and when it does happen. Just a couple of minutes on these because there's not much to say. That to me, this looks like an artificially tight range going back almost a year now, when we see this kind of volatility historically, and then literally almost right since the Trump administration took over. Very tight range, very closely monitored. If you can trade this, good for you. You're a better trader than me. I don't mean that flippantly. It's very difficult for me to trade this, and I just don't. I'm waiting till I see a break out of this range, and then I'll be more than happy to jump in. But this is just not what I excel at. Yields, the same thing. Almost an inverse of this chart. This does look like a longer-term consolidation at the highs that generally would want to resolve higher, but I think the batting averages come out at something like 60-40, not a huge edge is what I'm saying. But again, we're going to wait and watch. I've got alerts set for when we break out of it, and then I'll pay attention. But for months now, it's been in my own interest to just ignore this. Overall view. This is just where I sum up kind of, the short and long-term charts here and okay, what do I think? Bullish as hell. It really is. As I said a moment ago, do not ignore the power of this. People who are trying to fight it and saying, hey, we got to revert. No, we don't. No, we don't. We do need to rest, and we're doing that. But even resting, we're going sideways and leaking higher, I think is the right way to describe it. We're not driving higher the way we were back here, but it's just, do not fight this. The cues look very, very similar, very, very strong. I put in the chat in the room a link to comments by Druckenmiller, who's in my mind, the best trader out there. And he's making comments on the profit outlook and talking to individual companies and, the profit outlook and what they're seeing, despite they all see the same stuff we do overseas. And they say that the profit outlook over the next 6 months is just intact, is very strong, and he's as bullish as ever. I don't want to put words in his mouth. I will re-share the link in the room, and it's about 2 minutes long, and it's very worth it. When someone like that is like, hey, look, you got to be bullish, I pay attention. Absolutely, and I encourage you to as well. Okay, here's what I mentioned a few moments ago. The difference between quote unquote value versus growth. I use the Russell 1000 value, and the proxies I use for these charts are the IWD, that's this one, and the IWF on the next slide, ETFs that they match the Russell 1000 value and growth. You can see here that value has been leading first to make new highs, and this started, particularly when you look back to about here, it started performing better than growth. So you can hear right here, kind of peaked. And this is when Bitcoin came down. Some of the semiconductors started to slow. We're not at new highs, but this is consolidating right below new highs. I do think it's bullish. And when you look at this slide, this is very simply IWD over IWF. And you can see here, it started almost on November 1st. So this is growth outperforming value. This is value outperforming growth. And this is a larger move than we've seen in some time. But you can see we've had these moves before, and they have tended to revert. I'm looking at this, and I really was thinking we could follow through higher. This might be a sustainable trend. This is really calling it into question. We could just roll over, and it's the AI trade and everything that we know that's going on, really working. While energy, healthcare, some of the lower, the less sexy value names that did reasonably well, utilities. I'm trying to think of some of the other value sectors, basic materials, some things like that, energy that we're taking the lead. It just looks like the growth that we're seeing in tech and AI is still too strong. So at this moment, I'm kind of expecting this to continue to revert down. It does merit watching, and I will be discussing it on Sunday evenings. Similar comparison. This was one of the reasons. This is one of the technical reasons I was focused on small caps potentially outperforming. This is a closer up view, but this is a very nice bottom in this ratio of IWM over QQQ. i.e. how small caps have been performing relative to the Mag 7, the leaders, the big growth names that we're all familiar with. This is a very long sustained trend down for several years. I'll blow the chart up, but you also can look at it, IWM over QQQ, and see what it looks like over time. This is we broke back down below it. And that, I'm watching that to see, we could certainly, this is a ratio. I don't think of this as a support level. It's just something to watch. These do trade similarly to, support and resistance, but not the same. So I'm careful to call in a distinction there. But I've been looking for small caps to lead. I have a lot of small cap exposure. This is calling it into question. I still like my own names, not changing my opinion there, but this would have been a tailwind I was looking for, and I'm calling it into question right here. Let's spend a moment on this. I wish I could remember who highlighted, and I will try and put it in the chat as well. Someone pointed out that every time SMH or semiconductors have made a new high and NVIDIA has not confirmed, SMH has rolled over since the beginning of 2023 when NVIDIA broke out and called out the AI revolution, et cetera. And this, to me, you can see where NVIDIA takes off relative to SMH right here. That's a 2+ year powerful trend, absolute leadership right there. And then you're calling it into, in July, NVIDIA has been coming down relative to the semiconductors, basically since July of last year, August, I guess, if we're being real precise. And then it made a new low right at the end Friday. So this is something this is just coming on my radar screen, and something I'm absolutely going to watch. I'm sure everyone on the call here knows how important NVIDIA is to AI and semis and everything that's going on. And this is an interesting development, and absolutely would call it a non-confirmation move. So worth watching. Okay, some of the standard charts. China, it's bouncing with markets, just much more sluggish, does not look nearly as healthy as some of the other markets, particularly EEM, which is one that I highlight. This looks great, back to almost to new highs. This was just a very brief spike, so I guess you could make a case it's over anything that was sustained at a high, and it just looks much better than China for people who are looking for ex-US exposure. Breadth, thought we had a small divergence here, but we don't really. This looks healthy, it looks okay, doesn't look really spectacular, doesn't look troubling. It just sort of it's a non-signal, I guess, is the best way to describe it. It's just, yep, everything looks okay from this perspective. 1 week performance, broadly bullish. Again, I'll highlight NVIDIA right here. The weakness really stands out. It reported earnings. It was strong into earnings. So a little pullback is no big deal. But when you go back to that slide, it gives it a little bit different context. Okay, some weakness on reporting earnings, but also part of a trend of giving up its leadership position. So, whoops, wrong way. Sorry about that. Google looks great. Some of the, the Mag 7 are really taking off again. Where is Tesla? I didn't even see it. That one, how did that one do last week? Meta, okay. Yeah, Meta down 10%. These look like earnings related news. I don't even see Tesla on here. Where is it? All right, I'll skip ahead. I don't have time to spend on it. There it is right there. Okay, that's a nice week. Everything else looks fine. Energy, I expected to do a little bit better, still very healthy. As I mentioned, these are some of the more value names: utilities, basic materials, real estate, industrials, machinery. These are generally value names, as well as like a Walmart, Coke, PG, a bunch of these. They look fine. They're looking good, but this is where the sexy names are these days. Crude. This bears repeating, as I've said a couple of times. I do think we're into another commodity super cycle that's going to last years, not months. It's going to play out a whole bunch of different ways. I'm looking into different names to play it. I think it's DBX, that is the broad commodity index ETF. I don't have anything there yet, but I'm looking at it closely for some longer term money. More of an investment than a trade, but just sharing my thoughts. Crude looks really good. This is a very important level that goes back years, and one that I've monitored. You can see it's traded up through it. It failed to fail is how I think about this. It pushed down, it tried to make new lows, held back, turned around right back up, and holding over this level. And this is Brent, which is seaborne, which is much more reflective of international stresses, and it's making new highs. Small pullback here. I think it's down less than $1 tonight. This is not bearish. I don't know how it resolves. There's a lot of volatility. It's deep end of the pool for those who are trading it. I'm trading it in very small, but I am bullish on energy stocks and energy names, and even natural gas, which I always call the widowmaker because of the volatility and the sustained downtrend, and more importantly, the failure of recent spikes for years. You'd get a push, it would fall apart. You get a push, it falls apart. You get a push, it falls apart. This one is starting to look different. This is not falling apart. Yep, it's pulling back, but it's not giving up the ghost. It's not making new lows. So I wonder if LNG could participate. LNG and LNG stocks could participate with the rest of energy. There's a lot of bullish technical signals here. I can speak to the fundamentals as well, but I'm trying to keep this on charts. Gold, interesting, the 150. Holding really well, tested here, but now we're trapped between a declining 50-day and the 150. Again, I talk about the dollar and how that'll play out. This is down a little bit overnight. If it breaks this, we could consolidate. There's a bunch of ways this could resolve. Longer term, this looks bullish. I just wonder if it needs more digestion of a hell of a move. So it certainly could go sideways for a few more months. Bitcoin doing a lot of nothing. All this range, all this volatility, and then since the collapse kind of when it started to fall apart last November, another push down. And this is just, it's very interesting to me with all that's going on in the world, how this it's no longer a risk on asset. It's not a flight to quality. It's not responding to war. It's not performing with gold. It's just kind of doing its own thing. I imagine something will happen to resolve this, but it does feel to me like the bloom's off the rose for this one a little bit. Energy equities, as I mentioned, still look great. Little pullback. Chevron, a major. Valero looks great. The refiners and oil and XOP, oil and production, still looks very good. Last week, I mentioned look at OIH as well. It just doesn't fit in the charts. That is energy services. Another one to keep in mind. Technology, back to leadership. KWeb, I throw this one out. It's been here for a couple of years. I'm not going to ignore it, get rid of it, but this is Chinese technology companies. I'm not making much of that chart. There's other drivers, but even software is starting to rally, which struggled for a while. This is the broad sector, and this is semis. We can see how they're all still intact and leading the market. And then this is just overall key sectors: consumer discretionary, healthcare, financials, and industrials. These are short-term charts, but overall they look quite healthy. I'm getting ready to wrap up. If anyone has any questions, we'll throw it in there. I'm going to just spend a couple minutes on my longer-term charts, these which I really like. This is from the bottom in 2009, a logarithmic chart that incorporates the effect of compounding. And you can see, ES looks very healthy right in the middle of the trend channel. Are falling apart last April, and the tariffs really held the bottom of this channel, and in my opinion reinforces the strength of the channel. This is COVID right here. We broke it for only a couple of weeks and went right back to the highs at the top. But all of that is a setup for the NQ. Look how good this channel is and how well it works. Again, this is a 17, 18-year channel, and the top of it here, I can pull this up. I probably should pull this up now that I think about it. But we are, by any definition, at the very, very top of a logarithmic chart that incorporates compounding. The idea that the NASDAQ is going to bust out the top of it, there's reasons to be skeptical at a minimum. So we're very stretched on the NASDAQ, while ES and small caps, IWM, look pretty healthy. So that's basically it. As I mentioned, any questions, drop them in the chat if you'd like. I'll give just a few seconds if anyone has anything to add. Otherwise, I'll just wrap it up there. And I have to drop a Go Sixers. That was an amazing comeback from down 3-1. Embiid is starting to play like a monster. And yeah, it's going to be very interesting games in New York this week and in Philly. So very good. I see no questions in the chat. Thanks everybody for joining. Again, apologize for being late. And all things being equal, I will be on time next week. Thanks very much. Have a great week. Good luck. you.